We're done with the first batch of startups. There are going to be two more coming tomorrow and today. So thanks for our panelists. Erik, you stayed here. Thanks, you guys. Now, next on stage, we're also going to call Matteo Daste from also Mind the Bridge Foundation, board member. And we're going to talk about a very topic that is at the core of this conference, that is exploiting Italian technology internationally. And we're going to talk about, I guess, also the last big funding from the Italian company that we mentioned already a couple of times, Decision, and just surprise us with more news. Thank you.
Okay. Thank you very much, Marco. Thank you to everyone here. So today we're very lucky to have with us Erik Jansen. Erik is an investor and also the chairman of the board of Decision Inc., which is the parent company of Decision SRL, which is a software company based in Latina. I've had the pleasure to know Erik and work with Erik and Decision, first in connection with the formation of the US company, and then the reorganization of the Italian company under the US company, and finally with a recent round of financing of $15 million in Series A preferred stock that the company recently closed. And so today with Erik, we will be discussing a few things about Decision and also about his background and how he got in touch with the company. And finally, we'll get some of the perspective that Erik can give us about the Italian startup ecosystem and Italian technology in general, and what opportunities exist for Italian technology companies in plugging into the US market, and what tools and structures and even legal models are necessary in order to optimize both the capital raising but also market exit. So I know we are already interfering with the lunch time, so we'll try to be brief here. So first of all, Erik, maybe you can start by giving us some background about you and how you got in touch with Decision and what's your connection with Italy.
Thank you, Matteo, and great to be here. I started working with Italy about 20 years ago. I'm a native Dutchman, but I'd moved to the U.S., and I ran into a fellow who was the founder of Hyperion, which is now part of Oracle, a big business intelligence company based in Stamford, Connecticut. And we started working together on a lot of interesting startups. And that led us to then start a venture capital arm of a very large technology hedge fund in Connecticut, and we raised and managed about $2 billion and did about 100 transactions in the technology space. At a point in time, few people know that Hyperion actually was started in Milan by an Italian and a Scotsman. And shortly after they started the company, they were able to sell the application, which really was a financial planning application running on a PC. You know, this is back in the 80s. They were sold to, I think, a number of large Italian companies, but they already knew that for them to grow it into a large global business, they had to locate it to the U.S. So they moved it to Stamford, Connecticut. They hired a CEO and obviously built a very large, successful company. About halfway through '99, when Arborsoft and Hyperion merged, we spun out 4 guys, early employees at Hyperion, to start a new business from scratch. I gave them a couple $100,000, and Marco and I really were the founders of a company called OutlookSoft, which was a business performance management company. I brought in a team. We brought in obviously additional capital, but very early in the life of that company, we had an Italian team based here in Milan that was super experienced. Was the old Hyperion team that we had and knew, and so we started selling and marketing in Italy and throughout Europe to the corporate market. And at the end of our OutlookSoft journey, we sold it to SAP for just under $500 million in '07. More than half our sales were international versus the U.S. Part of that experience, obviously, there was a large Italian contingent to that. One of our VP of sales of that company introduced us to Decision, to the founder. Franco Petruzzi is here. And he said, look, it's a very interesting company. You should take a look. And the team and I, the same team that had built OutlookSoft with me, we started looking at the business, really digging into their the technology. They had already acquired a number of customers of high caliber, big companies, big names, which we know from experience is hard to do as a small company. So as we dug in, we really became convinced that this was truly a very unique company with tremendous technology, a great technology team, a superb customer base, but per the founders, Franco's acknowledgement, lacked the managerial and capital capacity to grow it into a global business. So after doing quite a bit of work, it took us about a year to work with the company, restructure the corporate entities, like Matteo said, start the incorporated business in the U.S., move the IP. We did all the things that we knew we had to do, because we'd done it so many times before, to build a U.S.-based global software company, this particular one focusing on the enterprise, which is most of what we do. And so our Italian connection, which was the VP sales at Hyperion, we became the VP of sales of OutlookSoft, based in Milano, introduced us to this other Italian company, Decision. We spent time, we loved the technology, and decided to go in and partner with the team and build Decision. Marco Resi, who is the founder of Hyperion, and I have another company here locally called Monomoto, which is a software platform company that's doing quite well. We raised 4 million euros for them, raising a little bit more money now. And just like Decision, these are companies that have core technology with real customers and real value proposition and revenues, and their business models transcend the local market. They could take it to Italy, but they could take it to other European countries, and obviously take it to the U.S. So just like we did with Decision, we're going to do the same with Monomoto. But so I've been working in and with Italian companies for a long time, and I found it to be a terrific market, great technologists, but obviously sometimes lacking the managerial and capital capacities to build it into a global business, which is obviously our opportunity as well.
Thank you very much, Erik. So next question, I would like to ask you to dig a bit more into the mechanics of this transaction, because after all, today we talk a lot about startups. We've seen some of them present on the stage, but nonetheless, for an Italian company to be able to raise $15 million from a group of US investors, it's pretty remarkable. So what I would like, and you led this investment round. So I would like to ask you specifically, maybe if you can share with the audience some of the challenges that you encountered in putting the deal together, and how difficult it can be to structure these transactions. And sometimes we talk about fundraising in the US as a quote unquote easy process, but necessarily it's not. So maybe you can share 3 or 4 points, bullet points about your experience, and then we can have a more general discussion about the Italian startup prospects.
Actually, it's not an easy process. There are 2 types of startups. The one startup is, and I'm talking about technology-centric startups. Early stage, just technology, really no customers, no revenues, but really good people. You put them on an airplane, you send them to New York, send them to Silicon Valley, put them in an office, fund them, and they build a team around them, and you basically start the company there. I've done a number of those, actually more with Dutch companies, both in New York and Silicon Valley. Actually, a second one I'm doing in Connecticut, where just basically you pick them up, you put them on an airplane, and you send them over, because they're small and there's really nothing here. A company like Decision and Monomoto are 2 examples. We have we have almost 100 people now in one and 40 in another. There's an existing business here in Italy that you can't just leave behind, nor do you want to. The problem with U.S. investors are that if U.S. investors doesn't have a U.S. company that actually has real traction in the U.S. already, they're very hesitant to jump into an Italian company, because they're saying, look, it's great, it sounds great, they're going to do it great in Italy, but does it go off or across the border to other countries? Does it really translate into U.S. opportunity? So the only way to do that is to prove that that actually is the case. So in our case, because we'd been there, we've done this so many times, we didn't have that hesitation. And I was able to collect a really world-class group of investors to do that. But I would say, to Matteo's point, if you walk in and say, look, I got this great Italian company, why don't you give me money and I'll build a global business, it's really difficult to do. Case in point, I don't know if you Scott Maxwell, he has a company called OpenView. He was in Inside Capital many years. He's a good friend. He started a business that was initially particularly focused on taking European or Israeli companies, technology companies, and enabling them to come to the U.S., funding them, hosting them, building them in the U.S., kind of what we're doing with Decision. And they abandoned the model because it was really hard, and they didn't really have great success because there's a lot of issues that you have to deal with. So it's a really difficult process. You have to have people that actually have done it before, know how to do it, know how to be sensitive to all the cultural issues, organizational issues that you have to deal with, and someone who has actually been able to build businesses that are both European and the U.S. Culturally, being a Dutchman, half European, living in the U.S. for 30 years, I can deal with some of these things, as do some of my team, but it's not something that many U.S. venture guys are either interested in or capable of doing. So they'll shy away, and they'll come in when you're in the U.S. and you got 5 or 10 million in revenues, and then they'll say, we'll give you 30 million then, but who needs them at that point?
Thank you. So we can say that the flip side of the coin, however, is that there are opportunities for U.S. investors to invest in great Italian technology that basically all that needs to be done is to repackage it so that the money can be invested into the enterprise, and then the enterprise can be taken to market in the US. So from that premise, can you expand a little bit about, in your experience, what the journey in this type of operations is, and what the opportunities are for Italian companies in the software arena to enter the US market and look for US exits?
I think particularly on the enterprise side, if you have applications that are focused on companies that are global, that are not local to the Italian market, but transcend that, and the needs that these companies have are global. And so the same need that the company has in their Italian subsidiary would be that they would have in their Spanish or their U.S. or their Japanese subsidiaries. Those are the applications that I think best travel to other markets. So if you kind of self-select, your company, saying, look, do I have the same value proposition to an Italian company versus a U.S. company versus a Spanish company or a Chinese company, wherever you want to go, is one thing you have to do. I still come back to, there's a lot of expertise that's needed. So you have to find, not people like me, but people like myself that have done this before a number of times to really understand what's required in order to be successful. The good news is if you find those people, and there are obviously people around that have done this, it's a good opportunity for those investors to come here, but because you can get companies usually at a good valuation, and two, the companies benefit because the partners that they get, both financial as well as from a value-added point of view, really help the company succeed. So everybody wins at the end. But I don't want to make it sound like it's simple or easy, because it's neither.
Mm-hmm. So basically, so Decision has been a success story, and it's the last of several other companies that have followed this route, basically through the dual company model to come to the US, put a holding company, attract capital. So we had the panel a couple of years ago here at Mind the Bridge, and we were talking about policy making and dual companies, and one of my premises was that you doing a dual company, it's really helpful for Italian startups and also for the economy as a whole, because it's really a mechanism to enable more foreign direct investment into the country, even though nominally the US investors' money goes into a US entity. At the end of the day, the money then trickles down into the Italian sub, and it promotes, development of technology in Italy. And also, not only that, but it also promotes the trickling down of knowledge, both in terms of market and also entrepreneurial knowledge, and trains, a generation of people working for that company. So that being the case, so broadening the discussion to some of the policy lessons that we may take from your experience, as well as the dual company model. If you had to choose, three things to advise to the country, or at least flag out for the audience from a policy making standpoint, to make the startup environment more friendly for U.S. investors, and also to open it up to the U.S. market, and therefore enhance foreign direct investment in the country in the technology sector, what would these three things be?
It's a good question. I think the things that we saw and that we had to deal with were a couple of things. One is it took us a year to restructure the corporate structures that were in place to make it an investable entity in the United States, because the tax structures, the corporate structures here are quite draconian. If you make a mistake, you can be in have real issues. So the complexity of all that, it was just overwhelming. And without your help, by the way, and your capable counsel and tax counsel and all the other things that we had to do, normal companies can't do that. They don't know how, and they don't have the money to do it. So that's one. It's the simplification of all that. The second thing is, Italy is known throughout the world. I have found out that, in terms of great customers that buy product and then never pay. It seems like we're 180 days or 360 days out. Huge receivable issues on small companies, and I think, I'm on the board of the state of Connecticut Venture Fund. So we invest in companies to base them in Connecticut. We fund them. We have an incubator program. So I'm very aware of the need for economic development, to get companies here, develop them, create jobs, create a tax base, et cetera. But, from the large company's perspective, I think it just doesn't make any sense. If you have innovative companies creating great products that you want to buy, to then starve them for cash for 6 months or a year because you have a cash management issue with your other major vendors, I think is very short-sighted. So I would hope that the large companies realize that these innovations that they are wanting to buy, that are good for their businesses, are created by small companies that need dollars to come in now. They need capital to come in now. The bills have to be paid. One of the ways that this could be alleviated a little bit is, some of the financial institutions here helping out those companies, either in a working capital line, because usually the receivables that these companies have, particularly in the enterprise world, are very good, high quality. They'll eventually get paid, but eventually we're all dead, right? So at the end of the day, these companies need cash to live. So these banks can, in the meantime, provide a really valuable function to provide working capital types of facilities to help these startups kind of thrive. Because in a startup, only one thing matters. It's cash. If cash is out, lights go out. And so if the big companies are hopefully insightful enough to realize that the startups whose products they're buying, that they like and they're great, they should try to be a little bit more accommodating to pay their bills to these startups a little faster than typical 6 or more months out. It's becoming a real issue. The other thing is, from a legal point of view, for U.S. or either some other European lenders that are typical venture lenders that you would talk to in every other deal, they won't touch Italy. For some reason, Italy is like the antichrist of lending. It's like the legal system is so convoluted here that they can't get perfect liens on anything. So they go just throw up their hands. You could have a $100 million receivable for Telecom Italia, and they'll value it as zero. They can't do anything with that. So that's another thing where simplification and creating a more straightforward structure, so lending from outside the world, outside of Italy, could be happening as well. having big companies paying their bills earlier, and it's creating a simpler corporate structure for the startups that doesn't have all the difficulties of management and governance that you don't want to deal with when you're 20 or 5 or 10 guys, you know.
Okay, so I'll throw in a bonus question for you, just to wrap it up, and then maybe we can have some couple of questions from the audience. So you are an investor. You have been raising capital. You have even in this investment, you've been investing alongside other investors. So put yourself in the shoes of Italian investors, and in this environment, one challenge that makes it very risky for Italian investors to invest in startups is that in addition to all the risks you mentioned, there is also, at the end of the day, a lack of large companies that promote, a healthy technology M&A market, and therefore the exit opportunities are limited, or if they exist, they tend to be at smaller multiples. So, what would be your, word of advice for Italian investors? Should they just look for companies like Decision, dual company models, or should they invest in Italian companies but only in certain sectors and not in others? What's your take on that?
It's a great bonus question. I don't want to presume to tell Italian investors what to do, but I would say looking for a liquidity exit, obviously at some point, is usually part of any investment decision that you make. The sale of a company or stock is always harder than to buy it. Buy is easy, selling is harder. So, if you look at the local markets, typically local markets exits are smaller and less valuable. You become more interesting the more you become a global or multi-country player, because the acquirers that are looking at you are saying, look, this doesn't just apply for our business in Italy, but this applies for our global business. So the value they're willing to pay you for that business is going to be a lot higher, because they can leverage your technology over not maybe 100 customers, maybe 1,000 customers or 2,000 customers, or more. So if I were an Italian investor, I would say either I would go in very local businesses that have a great business here in Italy that can succeed and do very well locally, knowing that your exits are not going to be tremendously high, but if you buy in right, you can still make a very good return. Or else go into the type of deals that we're doing, where you have a great technology like Decision that is global, that scales, that has global customers already, that's going to be based in the U.S. and going to be basically getting an exit at U.S. multiples once we build this company, $100 million in 3 years or so. Great multiple opportunities there. So partner with exit with other investors from the outside, and partner with us early, so that we're starting here, but we're going to take it globally, and and take advantage of that arbitrage of starting here but selling in the U.S.
So thank you very much, Erik. And also I just want to add that in addition to great technology, you also need to have, great people. And, this is thanks to the vision of Franco Petrucci and his team who is here. So if we can have a round of applause, both for Erik, but also for Franco, who is with us today. And with that, I'll open it up to questions if we have time, maybe for one or two, or only one question. Okay.
Good question.
So.
Can you shout it out?
Thank you. You said you work in an American public incubator, right, in Connecticut?
I don't work there. I'm on the board of the company that created one.
Since in Italy we have a lot of public program, incubator and grants, I would like to know the difference between an American one, because it's not very famous like a public one, it's more private, right? And an Italian one.
I think the one in Connecticut that I'm referring to is I call it quasi-government entity. What that means is that the initial money that this entity got from the state of Connecticut some 25, 30 years ago was from the state money. That money is then being invested over the last 25 years and reinvested. So it's like an evergreen fund. So it's no longer state money, although the state could pull it back if it wanted to. But it's almost like a self-funding entity at this point. So it still has some of the characteristics of government, but ultimately it's a semi-private opportunity. What we did in this case, Connecticut. I'm not sure how much you know of the state. I live in the capital of hedge funds, in Greenwich, Connecticut. Stamford actually was listed as the number 3 startup city in the U.S. right now. You have great companies, United Technology, GE, a lot of technology-based companies within like 25 miles. You have a huge customer base in financial services, advertising, media, insurance. So it's a great place to be. So what we want to do, and I don't know much about the differences between Italians, but we want to basically create a space for entrepreneurs to come there. And in fact, I'm relocating now 2 companies from Silicon Valley to Connecticut, both in kind of video media space, which has become a big area of focus within the state. We've actually done a big tax program to attract post-production facilities into the state, which we now are the 2nd largest after California. So we're moving companies now into the state from California, from UK, from Greece, from other places. And so we want to have a space they could come in and have a place to go work right away, spend 6 months there, rent a desk, have services, the same thing. And I think in this particular case was mostly funded by United Technologies, which is a big tech company in Connecticut. So the makeup of it is similar. The only difference that in that incubator is that the investment arm, on which I'm a board member, is a separate decision-making process from the incubator. So the incubator is really more a service provider to startups with all the services around it. And obviously the investment arm looks at those, but there's not like 500 startups or tech stars in New York, where they, each get like an automatic, 50, 100K. So it's a little bit different than that. But we're just starting the new one, so I'll let you know how it turns out.
Okay, Erik, thank you very much. And now we can break free for lunch. All right, bye.
Thank you, guys. Thank you, Erik.